And my guests tonight are Alan Lloyd from Lloyds Management Services and Michelle Atefi of Atefi Accounting and Bookkeeping, Inc. So welcome, Alan, and welcome, Michelle. Thank you for joining me in the studio tonight. And Alan, we'll start with you. If you could give us a little bit of background information on yourself as well as your company and how long you've been in business.
Well, Lloyds Management Services has been in business for about a year and 4 months. That was after I left the CRA, after a little over 10 years of working in their outreach department as the department was brought to an end. So it was a good move to return to entrepreneurship and doing the best I can to help all businesses with their accounting, bookkeeping, and tax services.
Excellent. Okay, thank you. And Michelle, you're a bookkeeper, and you are the owner of Atefi Accounting and Bookkeeping, Inc., and you're also a certified professional bookkeeper. If you can also give us a little bit of background information on yourself as well as your company and how long you've been in business.
Sure. Well, my background actually is quite diversified. I could talk to you about it an hour on just what I've done all over the working career. However, it seemed like every touch point in every industry I worked in seemed to touch accounting in one way or the other. So in the end, my last position was with Magna Corporation, and that was back in 2010. And I was laid off for the first time in my life, and I thought, you know what, I've kind of worked in accounting all these years. I think it's time that I get back into doing this as a business. So at the end of 2010, I decided to start the business, and it's been 3 years now. And I've just started going through the incorporation process and hired my first staff. Wow. So things are moving ahead, and the business is growing.
That's excellent. Well, and we're going to talk a little bit more about transitioning from the sole proprietorship to corporation a little bit later in the show, and then obviously you're going through it, so you can give us some insight on that. So,
sure.
So Alan, what we'll do is we'll start with you, and I'd like to ask you about you're a tax accountant essentially,
Mm-hmm.
and so let's start with the bare basics. What is considered a business for the CRA in the CRA's eyes?
It's an excellent question. And the CRA is using perhaps their interpretation of that legislation, but truly a business needs to have a chance of profit or loss. And so, well, we know they have a chance of loss, but the chance of profit needs to be realistic. Now, the CRA will apply the legislation very plainly, which doesn't give you much room as a business to vary according to industry. So it really is, as far as a business is concerned, to consider the industry and how long would it really take to be profitable in a specific industry. Mm-hmm. But the CRA is considering that probably the easiest way to reduce the audit time by just simply stating no chance of profit, and next thing you know, you're closed.
So, and are all different industries have different periods that they would consider reasonable as returning a profit?
They do, and there is nothing really stated as such. It really would be the industry standard in perhaps a geographical area that you're in. We'll say a farmer, for example. Mm-hmm. You know, if for the first time planting a seed, he might need 4 or 5 years to realize a profit. But if you open a Tim Hortons, you're profitable the same year.
Probably, yeah. Absolutely. Okay, that's great. So that sort of defines right there what a business is, and would they'll just come in and shut you down if, say, within the time frame that they think is reasonable that you would be turning a profit, that you're not, they will just come in and say, okay, you're not a business, so they'll close you down? Or how do they do that?
Well, in effect, the fact that you won't be able to claim the expenses will become prohibitive.
Okay.
Yeah.
Mm-hmm. Okay, well that makes sense. Okay, Michelle, over to you now. You're a bookkeeper. Let's start with sort of, a lot of people have this question is, what is the difference between, Alan's an accountant, you're a bookkeeper, what's the difference between an accountant and a bookkeeper?
Well, that's a good question. I'll go by the process instead of the person. The accounting process versus a bookkeeping process. The bookkeeping is more of the data entry. We get into doing accounts payable, accounts receivable, bank reconciliations. So it is a lot of data entry focused. When you move into accounting processes, you get more involved with the financial statement side of things. So you will drop the financial statements, and maybe the owners want to see some more detailed reports based on those financial statements. So it's a little bit more in depth than doing the basic bookkeeping. Now there's a lot of bookkeepers that really do get more involved these days as demands from the client are there for the reporting purposes. So to add value to your clients, I mean, I certainly do that practice of trying to give them as much financial statement information that they can handle and understand to help them with their business.
So would a business owner then need a bookkeeper and an accountant?
I truly believe that the accountant has a role, especially when it comes to doing taxes, and when they're in a corporation as well, because there's some tax advantages in having a corporation versus operating as sole proprietorship. So to have a good accountant to give you advice around things like that, definitely there's a role for both.
Okay, well, let's hold on to that thought. We will be right back on Your Business with Charmaine on Rogers TV, so please stay with us.
Been with Michelle with Atefi for a couple weeks now, learning a lot. There's very busy, lots of work to do. The day consists of doing several different files or a few days on one file.
Hi, and welcome back to Your Business with Charmaine on Rogers TV. I'm speaking with Alan Lloyd of Lloyds Management Services and Michelle Atefi of Atefi Accounting and Bookkeeping Inc. tonight, and we're talking about your business, your books, and the CRA. And just before we went on break there, we were talking about accountants and bookkeepers and the difference between them, and do we need an accountant and a bookkeeper, or what are exactly the roles? So Michelle, if you want to elaborate a little bit more on that.
Sure. I do know from most of the accountants that I know that they don't really like doing any of the bookkeeping. So they would prefer that the owners and the clients get their own bookkeeping done and then submit the reports that they need, usually at the year end, to be like a trial balance and a copy of the financial statements. And so that's the starting point for them.
Okay.
So they'll start reviewing that and do the entries that they need to do for the end of the year. Usually the accountants will also do like depreciation entries and things like that on your assets, the fixed assets, and get the taxes done, giving you great tax advice.
Great refunds, right?
Great refunds, hopefully.
Yeah. And I also wanted to allude to the video we just saw that was in your office, if you want to just sort of elaborate a little bit on that.
Sure. That's my new staff, Lorianne McCaver, she's newly broken in 2 weeks, so I'm sure she was a little nervous doing the video clip, but she's really come into the role quite nicely, and she's a great addition to the team. So I look forward to continuing working with her.
That's great. And where's your office located?
Actually, the office is located at Huronia and Big Bay Point, the ESS Direct. Cinda and Darren have done a great job, and Susie, of doing an expansion in that building and really catering to small business by setting up some small remote offices. And they're about to open another addition as well. So
Excellent.
It's a great space.
That's great. I also wanted to remind our viewers tonight that this is a call-in show, so if you do have any burning tax questions or questions for the bookkeeper, please do call in at 705-737-0779. And so Alan, let's get back to you and let's talk about expenses now with your business. What would, as a business owner, what would constitute business versus personal expenses, and how do you differentiate? Because I'm sure that there's a fine line there somewhere.
If we start with the Income Tax Act, the rule is called change of use. And so if you apply that rule of change of use reasonably, generally those expenses will be accepted.
Okay.
So change of use, especially for expenses that would be enjoyed both business and personally, such as a home and a vehicle, you could see where that change of use would take place. So it would be up to you to make a reasonable assumption as to what that change of use was.
Okay, and what kind of expenses would be examples of change of use versus, business versus the crossover between business and personal?
And anything where you would have a personal enjoyment benefit. Now, generally speaking, again, this is more policy than legislation, but generally speaking, if the personal portion of it is 10% or less, then they consider it to be 100% business.
Oh, okay.
Right, and you can, and the other way around too. They don't want nickel and dime, and so if its business percentage is less than 10%, it's considered to be 100% personal, therefore not eligible.
Okay.
So that's only with what would be considered to have that change of use rule.
Okay. Now, following on that, less than 10%. What if you have a home office, and that is less than 10% of your total square footage of your home?
That's an excellent question. The 10%, 90-10% rule applies, again, it's a policy more than a regulation, applies specifically to capital.
Oh, okay.
Okay?
Okay.
So it doesn't mean that you cannot claim the current or supportive expenses to that capital, but you would not be able to claim or a capital cost allowance associated to that if it didn't fall within the 10%, 90% rule.
Okay.
Yeah.
Okay. Well, that sort of clears that up. Okay, Michelle, let's go back to you and ask, first of all, those things that Alan just mentioned, are those the kinds of things that come up at all with you, with clients? Do they ask you those kinds of things? Are those the things that you would normally deal with?
No,
as a
anything that's
bookkeeper?
really tax related is dealt with the accountant
So
level.
you would refer it back to
Right.
a tax accountant.
I do get questioned though on certain expenses by clients if they can deduct them.
Right.
I am fairly flexible, and again, I think the key term is being reasonable
Right.
as far as CRA comes
Right.
into play. But things like if they don't have a receipt for something that I'm deducting, but it looks like it's a business expense, I will, a lot of times I will put that through the books, but I will also let them know that if they ever come into an audit situation, that they do have to provide supporting documentation for those deductions.
Okay, so what would happen in a case like that? You're putting something through as a business expense because it wouldn't be a personal expense because it's, I guess, obvious. But if there is no receipt, then